I have done it. I have done it. Yes, yes. I have bought Apple and I have bought Tesla. The two stocks that I've been waiting forever just to get a little bit of action on, it has finally come. The big kind of corrective move that we've been waiting on for quite some time. For those of you out there, you know that Apple and Tesla have been getting bought up like crazy just before the split. And I found it very hard myself to want to buy those stocks into all of that hype. For me, I thought that it was very possible these two stocks were going to see a correction very soon because it just seemed like there was so much hype and energy around these ones that they would just never fail. They would never come down. But sure enough, I stuck it out. I waited a little bit. And today, or the past couple days, we've really seen the stocks Apple and Tesla correct after all this hype going forward into the split. And I decided myself, why not pick up a couple shares on both of them as they've corrected into these cheaper prices than previously to the split. So what I want to do is share my screen, get into showing you guys two charts here on Apple and Tesla and show you why it is that I started purchasing these stocks where I purchased them. All right, here's Tesla. For those of you that tune into our channel, to put it simply, anytime the stocks are trading above the yellow towards the green, I will see that as an overbought market, and I will not find myself really taking big long positions if the price is trading over that yellow line. Well, just today, Tesla was able to correct enough that it actually dropped below the yellow line and started to come closer to this white line down here. So if I may, you can just think of my chart and all these lines that you're seeing on this chart as sort of a guideline onto when something might be overbought and when something might be a little bit more oversold or on sale. The best way I can explain this is the middle level here in the middle of the chart, that white one where I just put that red line or these couple red lines, you can think of that as sort of the halfway point or the fair value point. So anytime the price gets close to that or we dip through that, it really can be seen as the price is on sale. So I thought today was a good day to at least start nibbling. Okay, I didn't take a really big position. I think I bought 5 or 6 shares in one of my longer term IRA accounts. And so the reason I'm doing that is because really we haven't seen Tesla have quite a big sell-off like this in a long time. And if there is any sort of hype that still surrounds this stock, it seems likely that people will continue to buy it up. And even if they don't and the prices come lower, that means they'll be coming lower into that $300 fair value price that I would like to own this company at even more. So I think this is actually a really interesting location for Tesla because A, it started to fall away from the highs where it was overvalued. It's coming down lower to where it's more true value. And so it seems likely that we might see some sort of support try to build back up in on Tesla on this pullback. So as long as the markets don't come tanking down anymore, we should be okay. But if in the event they do, I would highly suggest watching the 300 mark or the true value or statistical average for Tesla as a new potential long entry. Now what I want to go over and look at is Apple, AAPL. So Apple had recently gone through the split, and you can see it went up to 137, and then it tanked today all the way down to $111. Right now, the true value or statistical average for Apple is about $103. So today, when I seen it drop as low as 111, I could not help myself but to just buy a little bit of it. So again, I had to buy some Apple and I had to buy some Tesla today because the prices have decreased so much from their previous high before the split or right after the split that it just seemed too juicy not to. Here's the thing, we never know exactly how far something might fall. We can build an idea. And so here's the issue that whenever you try to wait for something to get too cheap, too cheap, too cheap, too cheap, you might just end up missing it altogether. So the approach that I've chosen to take here with Apple and Tesla is to start investing a little bit. It's called limping in or sizing in. I don't know exactly when the bottom might happen. I have good ideas as far as where value points to buy will be, but which one ends up being the ultimate bottom is usually a little unknown 100% of the time. So rather than trying to guess and think this is going to be the bottom, I'm just simply looking at these two stocks and telling myself from where they previously were to where they're currently at and where they can go, this is a location that I myself am willing to take on some risk or willing to invest in these companies. I wouldn't even mind if they got a little cheaper. Even though I bought them and would like them to go up, I wouldn't even mind if they go lower because then they're just becoming cheaper. So with that being said, the true statistical average right now on Apple is down at about $103, $102, $105, right in that zone. So if in the event over the next couple weeks we even see Apple down to as low as like $100, I would still be willing to pick up shares there, and even as it goes through 100. So again, if there's any sort of hype that still surrounds Apple, still surrounds Tesla, we might see these dips get bought into very viciously. And really, that's the whole goal. So I hope you guys like this video. I hope you learned something new. As always, thanks for tuning in. Hit the thumbs up button, notification bell, subscribe to the channel if you haven't done so already. That's how you know when we release a new video. Everybody take care, and I'll see you guys on the next one.